Good morning, everyone, and welcome back to the channel. Today, I'm going to give you a little overview of a firm of the company called AFFIRM, ticker symbol AFRM. This is a company I've been watching for some time now. Please do not take this video as investment advice of any type. This video is strictly for educational purposes. I am not a financial advisor. I do have a position in this company, and there are some catalysts coming up that may attract some attention to the company. But I just want to give you a brief overview of the company so you can have it on your radar and so you can do some additional research to determine if this is something you'd like to take a small position in or not. The company, again, is a company called AFFIRM. And this is what we call a buy now, pay later company. It's fairly new. I believe it's about a year old. But during that time, it's really established itself as one of the premier companies in that space. And I'm going to talk a little bit more about that in a minute. What this company has done is partnered up with some major companies, and what happens is usually it's a more expensive purchase, but it can be as low, under $100. But usually we're talking, either $100 to possibly even several $1,000 purchase. And what the company allows you to do is you go through a little process at checkout, and it allows you to break the cost of the item down into several non-interest payments that are defined at the time of checkout that you agree to. And so a company like Peloton that sells, say, a $2,000 product, this now makes that product affordable to more people, and also it convinces consumers to otherwise probably make a larger purchase than they otherwise would have now that they can break it up over time, not put it on their credit card. It does not show up on their credit report in any way to negatively impact their credit. There's no credit check done. And so you can see the appeal that this company has. The company itself, AFFIRM Holdings, ticker symbol AFRM, has, like I said, it's been around, I'd say, a year or so. It's currently trading around the high $60 range. You can see I'm recording this video on Monday, January 17th. The market is closed today in observance of the Martin Luther King holiday. This data here was as of the close on Friday. The company closed at $69, down a little over 4%. And then after hours, it was down an additional percent, down to 68.5. The market cap on the company is $19.5 billion. Nice. The stock is heavily traded, trades around 8.5, almost 9 million shares a day. Now, one of the things about the company, this is a new company, and it does earn a lot of money. However, you can see that the company is still a loser. It's losing about, at this point, $3.63 a share. As of the time of this video, we don't know when they will be profitable. But it is a legitimate company, and it is garnering quite a bit of attention. I'm going to take a quick look at my TradingView account and look at some technical analysis of the company. The company here, you can see, started. This is a 1 year chart or five year chart, I believe. Each of these bars represents 1 week of trading. So you can see the company was launched to some fanfare and was very well received. And then slowly after the launch, kind of slowly, gradually fell down and was trading in a range here between the high 40s and $70 range for quite a while. I'm going to get into this portion in a minute. These blue lines here, as I said, I've been watching this company for some time, and these blue lines you'll see as we get into the other time period charts are support and resistance lines that I draw on my charts just to track price action of a stock. You can see here that this company at this time is very, very heavily impacted on earnings. You can see here whenever there's an earnings announcement that the company reacts very, very radically to those earnings. Even though it isn't profitable, investors obviously want to see that there is a path to profitability of the company and that their earnings growth is meeting with expectations. Now, you can see here a fairly rapid increase in the stock price. They ran this thing up to almost $170, the mid-160 level. During this period, the stock benefited. This is this right in here, this time period here is fall of 2021, September of 2021. And a series of events happened that helped to propel this stock fairly rapidly upward. One is they had blowout earnings here in the third quarter. I mean, they just blew things away. Then they announced that they partnered with Amazon and that Amazon would be making AFFIRM their exclusive buy now, pay later. And as you can imagine, a company like Amazon, several billion-dollar company, this has got a huge impact on a company such as this, knowing that they're going to get all of that business, and it's by far the biggest partnership that they could ever hope for. But then after that announcement, the stock has just slowly dwindled down, where we're now trading back down in the 60s. Okay. During this time period, some events have occurred outside of the company that have really had a negative impact on this company. The primary one being the realization that the Fed is going to end the tapering and begin to increase interest rates. Increased interest rates have a larger effect on growth stocks than they do on other stocks. And the reason for that is a company like this, the way they're able to provide their service, buy now, pay later at no interest, is they require access to large amounts of capital at a very low rate. Well, in the current, up until here, the interest rate environment was virtually, there was no interest rate. So they had access to almost unlimited funding at no interest rate. So the fear is now that the Fed is going to begin raising those rates, the income this company will be able to generate will be lessened because they won't be able to just get money at 0% interest. They will have to now also pay someone else interest to get access to those funds, which is sort of true, but in my opinion, I think it's way overblown because the company is at a size now where they'll be able to use their stock and use other methods to still get highly reduced funds rates. So what I want to do is I want to just click back here, and you can see here, this is summer of 21. You can see some gaps, but you can see how this thing went up. The Amazon announcement, better than expected earnings, and then the late November, winter of 2021, Fed starts to announce, hey, we're going to have to begin the taper or end the tapering and begin to look at these gap downs. And I mean, this thing is just slowly beat down to now a range where we are at now a level. Let's go back to the yearly chart. Whoops, 1 year chart. Where we're at a level we were at prior to the Amazon announcement and their blowout earnings. So that's one of the things that intrigues me about the company. But there's another catalyst coming, and I think this could be huge, as big as the Amazon announcement, if not bigger. Okay. One of the things that we've seen over the last couple of years is these fintech companies coming out that are what we call disruptors. They disrupt industries because they are nimble. It's competing in a way against existing brick and mortar banks and companies. They have less overhead and they have the newest technology. And one of the things that they're able to do is very quickly decide if a purchaser should be extended credit, and if they should be extended credit, how much that is, okay? And they may use artificial intelligence. They say they use artificial intelligence. Whatever it is, they're able to make financial decisions so they're not getting hurt too bad with people spending the money and then not paying. The catalyst that I'm referring to that is coming up, that they've already announced and are taking names, is what they're calling the AFFIRM Debit Plus card, okay? And this card is different. It's actually a very innovative and interesting product, okay? What it allows you to do, unlike normal debit cards, you do connect it to your bank account, okay? As I said, this is based on the research I've done on it. The card is not available right now. The only way they are taking is a waiting list right now. But what this card will allow you to do is, let's say you have $300 in your bank account that's connected to the card, but you want to make a $500 purchase, okay? What this card will do is, at the checkout window or at the point of sale, it will tell you how big of a purchase you can make that will actually exceed your balance. So say you have $200 in the bank, you want to make a $500 purchase, it will tell you if you can go ahead and purchase that item, and then how you will repay it using a payment structure. The payment will be authorized and you'll be able to walk out of the store with the item. And the balance will be broken down into 4 interest fee payments. The purchase must be over $100. So in a way, it acts almost like a credit card at that point, but it isn't a credit card in that there's no credit check done, and it's not a set line of credit that they're granting you. It's a decision based on the individual, based on their relationship and history. Some other things: there's no overdraft fees, there's no sign-up fees, no annual fees, and no late fees. So here again, it's a really interesting product, and I think it's going to be well received in the marketplace. And if they can use their partnerships with these other companies, I think it's a game changer. I really do. I think it's going to be a must-have card. If you're interested, you can go to affirm.com/debit. You can join the wait list and find out more information about it. There's an FAQ that answers most of the common questions. And then there's also a link here where you can, where they are already looking at this for business usage. I'm very intrigued with this company. Obviously, it's a very risky company. It's not something you're going to want to really throw the house at and throw a huge portion of your portfolio at. We don't have a specific date when this card is going to be launched, but based on the fact that they are taking a credit or they are creating a mailing list already, and they've got quite a bit of detail on the card itself, I'm guesstimating in the next 3 to 6 months this product will be launched. The way the stock has been beat up, I really think that most of the risk is behind us. Not saying we couldn't get back down and lose another, what is it? We could get back, probably test these levels again somewhere in the mid 50s to high $40 range. So at this point, but it may be time to start nibbling at this a little bit. Maybe take 1 or 2% of your portfolio and use some strategies to maybe take a small position. Either pick up a few shares of the stock or use a put credit spread, something to that effect on this thing. But it's very intriguing to me. I think the timing is right based on how they've beat this thing down. Do your own due diligence, though, before you invest in this. Make sure this is right for you because, as I said, it's a very risky company. It's not profitable at this point. But there may be some trading opportunities moving forward. And once I think the Fed settles down and we know a little better exactly what we're looking at in terms of the actual interest rate hikes, I think that damage that is to be done has already been done. Now, one other thing I just want to caution. Be very careful if you do enter a position on holding it through earnings. I personally would not hold any investment in this company through earnings at this point because with the newness of the company, we don't know, even if they come out with blowout earnings, the thing can get beat down. We don't know what their investor base is at this point because there's been a huge turnover during this time period, a lot of speculation. So just be very, very cautious. I want this stock to be on your radar with this catalyst coming up of this new debit card they're introducing. I think it's going to be a game changer and really be a nice catalyst to get this stock back up. I don't think we're going to retest these highs in the short term of the 166, but I easily see this thing anywhere from the $70 to $100 range after the introduction of the debit card. And in the meantime, if you do some conservative option strategies, you maybe pick up some money along the way. So that's our overview of AFFIRM.com, ticker symbol AFRM. We'd appreciate if you'd like the video. Please comment below if you have any questions or observations. And if you'd like, subscribe to our channel. We'd really appreciate it. Thanks again.